Let's crack on. So I came across a very funny video on holiday.
Welcome to speed dating. Each of you is going to meet.
Don't worry, Steve. I really wanted to play this video.
Welcome to speed dating. Each of you is going to meet for about 3 minutes. Then you're going to hear this buzzer. Okay? And when that...
I've got 2 CAFOs in my life, by the way. And a CAFO is what I call a Chief Anti-Fuck-Up Officer. My wife is my primary CAFO, and Steve, my business partner, is my secondary CAFO. And I thought it would be a very fun thing to play this video. It's incredibly crude. It's basically Donald Trump speed dating. It's hilarious. But I had 2 vetoes from my CAFO, so
You could have a vote which could overpower that now.
No. I looked at it again this morning. I was like, yeah, everyone will probably, half the room will just leave. It's quite rude. So we were going to do a speed dating thing, but we're going to breeze through that because we are running late. Well, I'm running late. You've done nothing. So at some point today, in your table, some of you don't, you're here on your own. You don't know anyone here. Just share. Who are you? What do you do for fun? Interesting fact about yourself. Take like a minute. Right, let's get into crypto. So this bit may bore some of the non-trading interested people, but I think most of you here want to hear some crypto stuff. So I've got 3 projects which, other than Ether, you all know I love Ether. Merge happened without a hitch, by the way. Beautiful. We are now proof of stake. Yay. But there are 3 other projects which I also want to load up on. As you know, I am not a fan of diversification. Even Warren Buffett said, diversifying is only something that idiots or fools do that don't know what they're doing. And if you look at anyone that's ever made money on the markets, it's not from having 10 mutual funds in their portfolio. It's all about concentration of funds and focus. That's basically how you do it. You need to know your basket of your core skill intensely. I'm lacking words here. You need to know your core thing that you're focusing on, and then you need to know a little bit about everything. So you have this very big peripheral vision. So if there are any bullets or arrows heading towards your basket, you can then pivot quickly. So I've always been a fan of that, and my own wealth in terms of on the markets, I've always made money from concentrations of funds and focus into a small handful of things. So when the bear market ends, I really don't want more than 10 crypto, really. Hopefully less, but these 3 will be on it. So the first one, let's talk about computers. So back in the day, we had these big old blocks and bricks as computers, whether it was a Mac one or a Microsoft one. They weren't very sophisticated. And a singular computer on its own has little value, really, other than to its user to play around with spreadsheets or do whatever. However, something came along. Tim Berners-Lee gave birth to the internet on the 1st of January 1983. Now, technically, there was a different form of the internet back in 1965, and it was physicists that created the original form of the internet, and just to pass data between each other from Hawaii to America. And then Tim Berners-Lee created the World Wide Web in 1983. And what that basically did is it just connected computers. And before you know it, you have a whole network of things talking to each other, or that could talk to each other. The fax network is a network in itself. Anything that talks to each other is a network. If you look at, the mycelial networks under the ground, you have tens of miles of mycelial networks in just a square foot of just Earth. It's just crazy. There are networks everywhere. The human race is a network. Neural pathways in your brains, that's a network. And so before you know it, you have a thing called network effect. Now, the core value of the internet is its network effect. The core value of any social media company is its users, and hence network effect. The only reason Facebook has value is because it has 2.3 active monthly users. And as I said before, if Zooks just gave me all of his source code and went, hey, create Siam book, okay, would it be worth anything? No, because I don't have the devs, I don't have the people. Facebook has tons of networks of staff, developers, and also users, and businesses paying money to advertise on it. So a lot of people think, oh, crypto has no value. Well, people who say that are ignoramuses that have probably done less than 10 hours of actual research, probably less than an hour. They're just a lot. I have very little time for people that make opinions based on headlines of a newspaper. And all it takes is 1 or 2 questions, and you very quickly see the depth of one's knowledge on a particular topic. And I love doing that. It's sort of almost a sadistic side, especially my close family. The English side of my family, they are prime idiots for reading something in newspapers and having an opinion on it. I go, oh yeah, so what about blah? What about this bit? And they have no data to back any of their opinions up. It's baseless opinions. Anyway, network effect, what was I talking about? Instead of bitching about my family. So, for example, we have all sorts of software on the internet, right? Stuff like Dropbox and ClickFunnels, Shopify, and that is a very small list. There are millions of different softwares out there. And natively, they do not talk to each other. I mean, yes, you may have some CRMs that integrate stuff, but typically, they don't integrate. So, some clever cookie came along and thought, how about we just build something that just connects them? And you have Zapier that comes along. Zapier. I used to think it was Zapier, but then I saw the CEO talking about the company, and they say Zap, and it's a Zap, so it's Zapier. So what Zapier does is literally, if you're a business owner, by the way, use Zapier. It's awesome. Basically, any software you can think of, they'll all communicate to each other. And it's great. You can get it to literally anything you can think of, Zapier can do it. It's awesome. We use it a lot, don't we? I say that because I haven't actually been part of the operations of the business for the best part of 6 years now. And so, we have a whole bunch of different layers of crypto, right? So you've all heard of layer 1s, layer 2s, yeah? So Ethereum is what's called a layer 1 protocol, okay? It's something where people build on top of. So you can think of Ethereum like WordPress. WordPress is a website building engine, and people can build lovely, beautiful websites on WordPress. So Ethereum is like WordPress. It's a layer 1 protocol, okay? And then you have layer 2s. So a layer 2 protocol will be something that's based on layer 1, but they tend to make things faster, cheaper, more efficient, etc. So, for example, historically, Ethereum has been very clunky and very expensive, as in processing speeds could be up to a couple of minutes, and the gas fees, to actually do stuff were horrendous at one point. I remember I was so stuck with a move, and I ran out of gas fees. And I was trying to place this massive trade, and I literally needed something like, $150 to place this trade, just in gas fees. But in order to move $150 worth of ETH from one wallet to the other, there were another $150 of fees to do that. So I ended up, basically, just to move $150, it cost me $150 to actually move. It was just horrendous. So what happened is that when network activity, or you have these layer 2s that pop up like Matic or Polygon. And so they sit on top of Ethereum and make things faster, cheaper, etc. And then you have layer 3s. A layer 3 will be something like 1 inch. So this is like a swapping site where you can swap crypto for another crypto, a bit like Trader Joe or PancakeSwap, etc. So that's a layer 3. So that's something built on top of Matic. So it's super fast, etc., etc. And you can sort of put this like in the real world. You could say the internet is layer 1, Facebook is layer 2, and then all of the businesses and like Facebook games. On Facebook, like I can't think of any. I don't play them, but Candy Crush, yeah, that's a whole business built on Facebook, right? Or that would be Candy Crush could be seen as a layer 3. But what about layer 0? Anyone ever thought about that? That's where Polkadot comes in. Polkadot is one of the coins I want to sort of load up on. Polkadot is a layer 0 coin, or crypto. And it doesn't get that much attention because it sort of sits behind the scenes. It's a bit like Amazon and AWS. AWS pretty much runs the world and no one's really aware of it. The CIA runs on AWS. And so Polkadot, so imagine each one of these dots being a crypto. project, all doing their own little thing, completely siloed. One could be some bullshit NFT thing, another thing could be, a trading platform. They don't talk to each other, and this is where Polkadot comes in with its parachains. So you basically think of Polkadot as being Amazon AWS in a very crude example. And so what Polkadot is aiming to do is be the king of cross-chain interoperability. And so you could, in theory, it's a bit like Zapier for crypto, basically. That's the easiest way to understand it in the most crudest analogy. Like you could have all sorts, you could draw random lines, zigzaggy lines, and connecting this crypto with this crypto with this crypto, and then you can have something beautiful. Just like the internet. The internet, I've said this before, Pokemon Go, Jesus. I mean, that hit 60 million users in 6 months. One of the fastest growing network effects ever. And the only reason that came to fruition is because you had a whole bunch of layer 1s and layer 2s. You had, smartphone. And in that smartphone, you have accelerometer, GPS. You had cellular data on that. And you also need augmented reality. You need a camera with that. You have all these little things that created some random rubbish game. But it was great. Apparently, people walked millions of miles across the globe with Pokemon Go. Nuts. But yeah, you will eventually have something that will pop up due to cross-chain interoperability, and Polkadot is one of them. So although I think personally it's a sleeping giant, and it won't get much press because it's not going to be some sort of sexy tool, it's AWS basically. So there's a strong use case for projects, less for retail. However, there may be some sort of mass adoption towards Polkadot, because if you go back to one of these, let's say you are a crypto project, let's say you're this one over here, and you sign up to be part of the Polkadot network, that's what you would then be called a parachain. So what this means is that, I'm going to sit on top of Polkadot and be able to be, linked with all the others. What happens is that these parachains will have 0% fees. So if I was a brand new project trying to start up, for example, 2016, I wrote down this pretty much pitch deck, right? Because I was thinking, in 2017 it's going to be booming for crypto. I may as well, try and set something up. And I've always wanted a really good trading platform, like all the benefits of every sort of trading platform you can think of. And I actually wrote out pretty much a whole blueprint for it. And we're not, it doesn't exist, and I'm not going to do it. But if I was a trading platform, wouldn't it be great if I just had 0 fees? So it would make sense to launch that on the Polkadot network and be a parachain. So feeless transactions on the parachains could be something that brings in users to other projects, not to Polkadot, but to other projects on the parachains, which by default will make DOT go up even more. However, institutional money loves DOT. They love it. It's hard to find documents about it, but ever since it popped up, it's been about 5 years old now, it's always had big institutional money, just like Amazon AWS did when that took off. And this is the latest one I could find, November the 1st, 2021. Polkadot is nearly always at the top in terms of institutional awareness and cash flow inflows. So yeah, it's typically you could actually have a teeny-weeny trading strategy saying, right, I'm just going to buy stuff that institutions buy. Now, albeit terror is there as well, so don't take it gospel. But nothing has a 100% win rate. But it's interesting to see that some of my other favorite cryptos are also on this list. I do like Filecoin, Avalanche, all that sort of stuff. So when looking at Polkadot, it's one of the key tokenomic metrics that I look at is the supply, right? Not just the supply, but the issuance rate. You know how I'm obsessed with the UK M2, US M2, as in the monetary supply? It's no different for a crypto. You have to imagine an individual crypto project being like a government. So if a crypto is just dishing out tokens left, right, and center and being highly inflationary, that's not good for the price of the token. It will only go down in the long run. Now, unfortunately, Polkadot is quite inflationary, and there are no measures that I know of that is going to address that anytime soon. So that's one of my sort of drawbacks to it. So if you go to stakingrewards.com, it shows you not all crypto projects that stake, but some. It's not the best website, but I do look at this because you can quickly work out what rough issuance rate that a project has for its tokens. And you do that by looking at the staking yield reward. So just take the lowest one. So if you were to delegate Polkadot, don't worry what that means, you're going to get roughly 13.92% ROI. But then look at the adjusted return. The adjusted return is 5.77%. So just doing some basic maths, you can say, oh yeah, there's roughly an 8% issuance there. So just rough ballpark, you can say, just by looking at that, there's the project itself is issuing roughly 8% more tokens per year. That will be their inflation rate, so to speak. And then when you actually really dive into it, yeah, not far off. Annual dilution, 7.71%. So what that means is in order to actually make money, as in real wealth or ROI with Polkadot, you just have to hope that Polkadot goes up in price more than 7.71%. Actually, more than that, because don't forget the US currency supply is also diluting at roughly 15% or more. So you always got to have all these little seesaws in mind, because we still think of crypto in terms of dollars, don't we? We still look at Bitcoin in terms of, it's 20K right now, or Ether's 1430. You know, we still, no matter what happens, we always translate it back to fiat. Eventually, that won't be the case. Eventually, we'll just think in terms of Satoshis. Hopefully, fingers crossed. But it's all very well being an idealist. You also have to be pragmatic. And we still live in the real world, right? I can't pay my rent with Polkadot right now. So you still got to always relate it back to the real world. So, yeah. And also, it's interesting that 93% of all the Polkadot circulating is currently circulating. One of the things I don't like is when you look at the amount of, or the circulating supply, how much is held back. Because, let's say it's half, so let's say only 50% are held back. The first question is, where's that other 50%? Who's got that? Are they VCs or angel investors, that have done pre-seed IPO or ICO, and can they dump that 50%? You then have to be a dog in a bone and find out how is that 50% going to be distributed, because that could kill a project. Now again, I'm not spending too much time. I'm breezing through this. We are running slightly late, but now is not the time to go into the real nitty-gritty. Now, the other layer 0, which I'm very interested in, is Cosmos. The ticker being Atom. Now, it's one of the more volatile tokens out there. I've had fun, as you've probably seen over the last 6 months. I've been shorting Atom a lot, because it's one of those things, when things go down, Atom just dumps. And they're labeling themselves as the internet of blockchains, because, yeah, it's basically what a layer 0 is. And I love everything they're doing, but there's always a but, right? So when you look at it from the outset, you see all these pretty pictures of how, this is what the internet looked like in 1982, and then that's what it looked like in 2005, and they're trying to draw comparisons of, Cosmos's growth against the internet, etc. And then you look at something like this, August 2022, look at, the ecosystem Cosmos has grown, especially in a bear market. It looks absolutely fantastic, doesn't it? But you then have to look at the actual projects that is on there. They're all dog shit. So you've got to be very careful just looking at random pictures you see on Twitter or the internet, etc. You have to dig down a couple of levels. And I thought, oh yeah, it looks really impressive, because I'm a big fan of network effect. That's where everything comes from. But yeah, so when you look at some of these projects, the biggest in fact, I'm stepping on my toes. I think there's a slide coming up in a bit. So yeah, you look at these charts and go, ooh, total number of active Cosmos zones, as in how many cryptos are joining this network. It's very early days, by the way, very early. Going back to Polkadot, they've got a temporary cap of 100 parachains. There's only, I think, 7 at the moment. So there's big growth for Polkadot to come. And also, if you're launching on Polkadot, as in you want to be a parachain, you've got to buy 10,000 DOT and stake it and lock it up. That's one of the sort of the positive buoyancy features of the DOT price, that a parachain has to lock up 10,000 DOT and park it basically for as long as they're a parachain. Cosmos has something similar. I don't know the lockup off the top of my head, but yeah, it has faster adoption rate. But again, when you look in, so there's a nice 3D thing on, I think it was ibc.com or something like that. You can spin this around and have a little look. And I just started digging into some of these bigger ones, and they're all dog shit. Osmosis, I think, is the biggest one they have. Just look at the price of Osmosis during this bear market. Absolute horrendous. However, playing around with the Cosmos network, it's quite good. It's fast, it's very cheap. You know, it really gives layer. I mean, Cosmos is basically a layer 0 and a layer 1, almost at the same time. So I do like it. Again, looking at basic tokenomics here, if you stake Atom, which is their ticker or their token, the reward you're getting is between 17 to 19%. But what's the adjusted return? About the same as Polkadot, about 5%. So straight away I know that this is a highly inflationary token. Highly inflationary. Just looking at that. So a lot of people will be attracted, 17%. But you've got to look at the adjusted reward. That is imperative. And then guess what? Yeah, look at annual dilution. So it's more inflationary than Polkadot, and that's closer to, you know, the pound sterling or the US dollar. So I think ultimately the future success of Cosmos is literally how many platforms it can sign up to its Cosmos, and also hoping that they also explode. So the real success of Cosmos and Polkadot is the success of the parachains, or the people, the projects joining their ecosystem. So all it takes is, you know, one new platform to join Cosmos, and let's say it's an NFT hub of some sort, or a trading platform, or whatever, and for that to explode, and then Cosmos will explode. So I think, yeah, although a lot of the projects on there at the moment are useless and rubbish, in my opinion, it's just a matter of time until something really good comes on. Now, you're probably thinking, oh, this is boring, Siam. Give me the dessert, give me the sexy stuff. Give me the thing that you're really, really keen on. And I think you already know this if you're an RT student. You've heard me talk about this a lot on trading pubs. Any guesses? Yeah, GMX. I wouldn't say I love GMX yet. I'm currently I'm dating GMX. I'm married to Ethereum. And this little flirt tease is prying my attention away. So the reason I really like GMX is because we're descending into a totalitarian or authoritarian world where Big Brother is getting their claws and tentacles around all of us in every facet of our life. So they're clamping down on privacy coins, like we saw with the crazy sanctions against Tornado Cash. I think it's a matter of time until Monero is then, the spotlight then moves to Monero, the biggest privacy coin. They're clamping down on anything which is anonymous. So they, you know, the Big Brother does not like DeFi. They do not like decentralized finance, because that's how we are circumnavigating the incumbents. I freaking hate banks. Like a few months ago, I've had a Barclays bank account, personal bank account, since I was 8 years old. My parents opened it for me. I've had it for forever. And then suddenly, this year, they went, nothing worked. All my direct debits bounced, nothing worked. I was like, what's going on? My online banking didn't work. They called up, oh yeah, we're not sure, you have to go in branch. I was like, what? And then I went up and they went, oh yeah, we've deleted your bank account. I was like, you're gonna send me a letter about this? They didn't even send me a letter. So I had to I spent 2 and a bit hours in the bank, like going, well, I've got lots of money in this account, where's my money? And I went, oh, yeah. And so I had to really kick off. And in the end, they gave me a banker's draft. It's like a bank check, basically, for all the money in the account. And then I spent a good 40 minutes kicking off going, well, wait a minute, I need my bank statements. And I did a white lie. I said, look, I'm looking to buy a house at the moment, and I need to go to mortgage, bollocks. And so they'll need bank statements, all that stuff. And they're like, oh, I don't know. And so they ended up printing out 6 months worth of bank statements on, 80 GSM paper from their printer. It's just horrendous. And also I needed that because I needed all the bank details for the direct debits and standing orders and all that sort of stuff. Absolute ball ache. And then again, Revolut recently tried to do the same thing. They just banned it. They blocked everything. I was like, God damn it. But there's a hack. I found a hack. And I heard someone else say, you can't see anyway. Someone said, just kick off, and then they'll just revert it. I was like, really? So I went on their online chat and started disputing, the reason I was with Revolut is because you're supposed to be better than the banks. I was using you because the banks are so restrictive, and you're supposed to be championing the everyday person. And literally straight away, oh yeah, sorry, your verification is now approved, everything's fine. I was like, that seemed too easy. I swear they've probably got a little flag against my name, silently monitoring my crypto activity. And I think it's just that. It's my crypto activity. It's just making me an enemy to the state. So what do we need? We need decentralized things. And so for trading, one of the risks I've said for years, and thankfully I haven't been bitten in the arse yet, and I don't think I will, is that all it takes is Binance to get done in, or Kraken, or Coinbase. I mean, Coinbase has basically sold its soul to the devil. Coinbase is the executor for BlackRock now. BlackRock has $9 trillion in AUM, and they're using Coinbase as their crypto dealer. So you just, do you trust after this morning, do you trust BlackRock? No. Anything BlackRock, Vanguard, State Street, I'm going to be very wary of. So Coinbase, again, if you have anything in Coinbase, they lift their skirt up and showed everything to the IRS and HMRC. Anything you've done through Coinbase, HMRC is aware. Just a top tip there. So they're going to be clamping down. This is why I like GMX. It's a decentralized trading platform where you can trade directly out of your MetaMask wallet. Mwah. So I will be moving gradually away from Bybit because I'm currently using Bybit. So I've had to plonk a whole bunch of Tether into Bybit as collateral, and then I trade from it, right? What if Bybit suddenly gets sanctioned? It will. Yeah, not what if, when is the answer. It will happen. This is why we need to flop over to GMX. So you can trade directly from your MetaMask wallet with your Trezor. I've always got mine. I've got a little condom for my Trezor because it goes places with me. Whoopsie. By the way, even if someone drugs me and kids, steals this from me, it doesn't matter. You still don't get access to anything. Don't worry. I'm very anal with my OPSEC at the moment, especially as my main computer got hacked recently. I did text out. My main computer that I use for stuff was compromised. And thankfully, all the security measures I do for my crypto meant that everything was fine. Because I don't just play with my own money, I've got other people's money, so I have to be super careful. So I've got my hacker friend, and I've mentioned him many times. He is like as high a level hacker as you can find. And he used to do, his claim to fame is that he stole £20 million from Barclays Bank once as part of a legal pen test. So the company he used to work for, he used to do penetration testing to banks. And back in the day, they said, anything you steal, you can keep. And in a week, he stole 20 million. And the ironic thing is he wired it straight to his Barclays personal bank account. And in his office, he's got a frame of the 20 million something statement on his wall. But then his boss was like, yeah, you've got to give it all back. And he was like, but that was the deal. That was the deal. But anyway, yeah. So he did that by, I've said this so many times, he hacked the Barclays mainframe, because they were using a mainframe, and it was air-gapped. Nuts. So that had never touched the internet or anything. He hacked it via the power cord. The power cord. Jesus. And so that company, they said, yeah, you've got some pretty good systems. You just need to, whenever someone's playing with it, you just take the power cord out. Now you're safe. Nuts. Anyway, he told me I'd been hacked. I didn't even know I'd been hacked. And he was like, yeah, we got to burn your computer, mate. So he's taking it home to burn, basically, and rip up, and yeah. Right, so moving on, GMX. No, not moving on, get back to GMX. So another cool thing about GMX is it's basically the casino. Like any trading brokerage, it's the casino. We all know the house always wins, right? Even in Vegas, Vegas is simply a mathematician's wet dream. It is all statistics and probabilities. And every game has their own statistical system expectancy. So they'll know, blackjack will have a system expectancy of, 0.01 or 0.05 or whatever. So in Vegas or any casino, it's a case of rolling the dice as many times as possible. Dealers will lose their job if they're not dealing cards at a fast enough cadence, etc., etc. But we all know, as old as money is, gamblers always lose in the long run. We may have lucky streaks, but then what do you do if you have a lucky streak in Vegas? They put you up in the hotel, make you stay longer, so you gamble more because they know, mathematically speaking, you're just going to give it all back. So you can actually, and I'll come back to this casino thread in a bit because you need a bit of background before we make sense of that. So it's a decentralized perpetual exchange, so you can leverage trade with crypto on a perpetual basis. So there's no expiry dates you have to worry about. But in order to maintain a trade, you will be paying fees every hour. And I've worked out it's the equivalent, or depending what you're trading, it's the equivalent of about 20 to 30% APR. Pretty high on the position size of your trade. So you've got to be very careful, and it's every hour. On Bybit, it's every 8 hours, but obviously the rates are slightly different. So it's relatively new. I've watched this, looking at this on CoinGecko, when I first saw this, it was about position 190, then 170. It's now like position 105, I think, on CoinGecko. It's zoomed up. It's got 100,000 users, which, again, from a network perspective, very good. $64 billion trading volume, and growing. And as I took this screenshot last night, I was doing my slides till 3 in the morning last night, not healthy. So that had $102 million of open trades, which is pretty cool. So it's growing, which is good. And it's growing for good reason, because it's a decentralized trading platform. And not only that, although it's DeFi, it has loads of beautiful optics, which are open and there for everyone to see. I won't bore you too much, but if you look at it, so it's based on Arbitrum, so it's an Ethereum layer 2, so it's super fast, super cheap. It literally costs pennies, not even pennies, cents, like 2 cents for a transaction. But it's based on Arbitrum and AVAX. Now, there's only, 15,000 people on the AVAX network, but about 85,000 people on the Arbitrum one, so I'm going to be using Arbitrum, or I have been using Arbitrum. You want to go where all the money is and where the bigger pool is. But as you can see, what happens, long story short, you can buy, they got 2 tokens. GMX is their main governance token, and they also have another one called GLP. So it's a dual token environment. Now, one is risky, one is not. So you can buy GLP, and what they do is they give out 70% of all the fees that they earn to GLP stakers. So you can buy GLP, stake it, and you're basically taking on all the risk because there is no order book with this. So this is why it's slightly different. And I think it's very clever from a tokenomics point of view. Normally with a trading platform, you have an order book. So let's say we split this room into 2. You guys are buyers and you guys are sellers. And I'm the broker, I'm the trading broker. If this table suddenly wants to put $1 billion long position or whatever on something, me as the broker, I need to find $1 billion worth of sells, right? And I simply matchmake you. That's what a broker does, a trading broker. We're matching buys and sells, and I top size, take a little fee for myself. With GMX, it doesn't work like that. There is no order book. So what happens is that there is a big pool of funds, which you'll see in a minute, and that's called the GLP fund, and all the P&L is taken from that fund. So if a trader wins money, right, obviously there's another trader that's lost that money, but that profit is literally taken from that GLP pool, right? So there's no order book. It's a pooled sort of mechanism here. Now, if you buy GLP, and obviously every trade, the fees are quite expensive. So to hold a trade for a long period of time, you're going to be bleeding fees. But those fees go somewhere, and 70% of those fees go to GLP stakers. So you are taking the risk. But we all know betting on the house is a good idea. The house always wins. So that's what you're doing. By buying and staking GLP, you're anticipating that in the long run, traders will all lose money, and all those fees are going to come to you. There are a few caveats to this, but so let's look at this. So you can see the trading volume is basically going up. This is like proper exponential growth, in the early stages. Look at any exponential chart. It looks like this in the early days. Volume's going up, and look at the fees. The fees are also increasing. The orange line is the accumulative one. Excuse me. But it's growing. But here's the cool bit. This is the trader's net P&L and the trader's accumulative one. So this is more. So you can see on the 15th of September, basically everyone on GMS lost a shit ton of money. So you can see on average over here, traders are generally losing money, especially on the 15th of September. What happened there? Big dump. Everyone was long, and everyone that got long got burnt. And the chart on the right shows you the cumulative profit P&L. So it looks very similar, but there are more losses than wins, cumulative. So good for GLP. Because traders in general lose. But obviously there's going to be some boom wins, etc. And that's a key thing with casino. The casino wants people to win now and then, not too often. Because what happens, it's like golf. Golf is a series of tragedies obscured by the occasional miracle. Trading is exactly the same. We bleed trades left, right, and center. Then we get that big old winner, and we're like, I am Gordon Gekko. I am the boss. And then we carry on bleeding more fees and more trades. So, and it also, part of this big old data sheet or dashboard, it shows you the open interest, which I think is beautiful. There's a trading strategy just to be made from that alone. You can see who is long and who is short. So just plucking a strategy out of my arse, we all know that traders lose on average, yeah? So let's just fade the average. Let's fade traders. So if everyone is net long, so as you can see right now, everyone is predominantly long, we need to be bearish. We need to short the market. When the market gets really bearish, we need to dive in and buy. So if Bitcoin were to dump to 12K tomorrow, what do you think everyone will be? Well, no. Smart people will be buying, but you have to imagine the common trader is a dabbler of the markets. They're not studying trading like we are. We're not, I am especially obsessed with the markets. It's all I do. It is me. It is my living. But most people, they do their life and they just dabble on the markets. They're not putting any research in. So if Bitcoin were to dump to, say, 12K tomorrow, and all of a sudden all the newspapers are like, Bitcoin's going to zero, blah, 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 everyone's going to get bearish. When I see this getting super bearish, I'm going to be gobbling up everything. I will not just that, I'll be taking out loans to buy more crypto in the real world. And I'll be levering up. So you borrow the dip and you lever up the dip. That's how you do it. Whereas most people do it the other way. Like if Bitcoin hits all-time highs, what people do? They go and borrow money and then they lever up. You don't do that. You borrow the dip and you lever the dip. That's how you make money in the markets. Basically fading the common trader. So I think this is going to be interesting. I'm going to be keeping a tight eye on this open interest chart. That could be quite useful for us. This one, what is this one? This is total revenue of the protocol and also supply side revenue. So basically, how much sales and how much open interest is this is the perfect chart. If you're launching a business, that is what you'd want to see. You'd want to see revenue like that, profit like that. Beautiful. Trading volumes going up, active users. We had a weird spike in June. I don't know, probably some YouTubers talking about it, I don't know. And then, because you have all these dashboards and feeds, you have other people making their own websites and stuff like that. So this is a third-party website. So all these charts were, part of the actual GMX dashboard. Token Terminal is a third-party one, and so is this. This is crypto fees. Look at that. It's relatively new. I mean, technically it's been around. It's an amalgamation of other platforms, other older trading platforms, but It's barely started, but look at the fees. GMX, if you look at the 7-day average, is 5th. So out of the tens of thousands of cryptos on this planet right now, GMX is already the 5th highest revenue-making crypto on the planet. That's nuts. Ethereum is always up there. This is another reason I love Ethereum. Like, if you're old school, I actually consider myself slightly old school. When I evaluate a crypto, I evaluate it using historic stock analysis. When you're buying a company, if Lara is buying another company or whatnot, what's the first thing she's going to look at? What is the revenue? What's the profit? What's the outgoings? What are the obligations? It's basic business maths, right?
No, it's not. It'll be, will Charlie kill me?
Oh, yeah. You go home, I bought another business. Yeah, and you also look at the people and the roadmap, all that sort of stuff. But, you know, business is just numbers, ultimately. Numbers with these very emotional bipedal apes running it. But yeah, and I like Ethereum because it's this huge, globally scaled network with an absolute load of fees. Are there still young people in the room? Is Marie gone?
Yeah, I think so. You're right now.
Sweet, I can be myself. No, I'm not going to swear. This is all going on YouTube at some point. Yeah, so I think it's very bullish that GMX is already the 5th highest revenue earning platform in the world of crypto. Now, let's look at the tokenomics. Basic tokenomics, I don't want to bore you to death. So, as I said, it's a dual token ecosystem, GMX and GLP. Now, remember, all the wins and losses are taken out of the GLP pool. So right now, that pool is worth wait a minute. Total, yeah, it is 289 million. So there's a pot of $289 million, which traders win and lose, etc. And that pot is growing because obviously the fees are continuing to grow.
322 now.
Is it really?
Yeah.
Wow, that's jumped. This screenshot is like a day old.
Honestly.
That's amazing. So I literally did this, I think, yesterday, this screenshot, and it was 389. So it's now jumped $40 million in a day. Nice. That means more people. What's the user number now? It was 102 last time. In fact, it doesn't matter. It's growing. Nice. So yeah, there's a pot of $320 million. And yeah, 70% of all the fees go to the GLP pool. So if you stake GLP, you're going to make 22 to 36% yield, which is good, obviously. You then need to look at the adjusted yield, which is still very nice. But GMX over here doesn't look that good, does it? So GMX still gets a nice share of the fees. So if you buy GMX and stake it, you get 30% of all the fees, and the yield is 15 to 16%. Doesn't look good, but you're not taking the risk. You have all the risk with GLP, but you don't have the risk with GMX. And also, the supply is pretty much all out there. So the total supply, I think, is about 13 million. And it's a soft, hard cap. So as the platform grows, they could elect to increase the the upper limit. But at the moment, pretty much 90% of all the GMX out there is out there. Bit like Bitcoin. Bitcoin, I think 93% of the Bitcoin supply is already out there. And it's very similar to this. So there's roughly just over 8 million GMX in supply. And it's not that inflationary. So it's actually really good. So when I buy this, I'm not going to be touching GLP with a barge pole. And I'll explain in a bit. The other cool thing is that there's this leaderboard. Although it's DeFi and everyone is anonymous, because it's on the Ethereum or Arbitrum, you can see everything. So on this leaderboard, you can literally see all of the biggest winners and losers. So I've clicked the 1 month, so I'm looking at the 1 month. So this top settled means these accounts, these MetaMask wallets, have closed trades. And so this person over here has placed 7 trades, lost 3, won 4, but is so far sitting on $313,000 worth of profit. But that MetaMask wallet has $35 million in it. That's a big whale playing around. And also using 15x leverage. Actually, I think it's that divided by 15. I need to double check. But yeah, you can have a look. So another thing you could do if you're up for sort of copy trading or whatever is go down this list and go, okay, who's consistently accurate? But you've got to be careful. So if you were to click this one, 9-0, so this one's placed 9 trades and won every single trade, you've got to be very careful. Remember, I made a video probably last week or 2 weeks ago talking about how hit rate is irrelevant and people can game it by placing lots of smaller trades. People are doing that on GMX already. Bloody scammers. Or not scammers necessarily, but the wins will be very, very small in terms of the amount of the project move. They're just betting a lot of money on teeny-weeny movements. So yeah, and these are the open trades. So there's someone right now that has 373K of floating profits. Now it's quite confusing because I probably spent 2 hours trying to find this freaking token. I was like, what is this token with a bear as the logo? And it turned out the bear meant they're shorting the market. I was like, oh. And I was trying to research this bull token as well. I was like, what token has a bull and a bear? And then I was like, I am such an idiot. That's a good 2 hours of my life I wasted. Yeah, so it turns out this person is shorting whatever, or shorting Ethereum, and is this much up. And this person is going long on Ethereum. Yeah, so this person went long on Ether at $1,200. So this person would have been way higher up in profit, but is still sitting on that. He's going to get, or she's going to get burned soon. Whereas this person shorted it at 1973. I'm still unsure, because Ether didn't get that high. So I think there must be some glitch somewhere. And the thing is, you can click on these accounts and have a little look into them. So what is this one? 9C, 8C. Which one did I click into? Oh, none of them. Anyway, I clicked into a random one. And as you can see, what are they doing? They're placing loads and loads of trades around the same area. The market has barely moved, but they're just super leveraging up. So this particular person has made, so if you look at the top bit, you can see a cumulative P&L. So 118K up at the moment. They got one trade that's running, which is this $800 profit. Everything else is settled. But and by the way, you can click into the individual trades and see what happened. Those trades were they were bad trades, because they barely moved. They're buying or selling it. This one they're trading Bitcoin. So, sorry, I'm pointing at my bloody laptop, but you can't see that. Yeah, so if you look into these actual trades, 30x leverage, and yeah, so it's $1 million trade, but you divide that by 30, and that's how much capital they put up for it. And then when you see at what price they close and open, as you can see, this chart shows you how much they're scalping. So I think this is going to be very temporary. Eventually, and it's only showing you the top leaderboard. There's going to be tens of thousands of people with very bad trades. I can't find them for some reason. They only show the winning trades, which is a bit shitty in my opinion. So what's the catch? Well, there's two. Because once you sort of get horny about something, you then have to go, right, what STI am I going to get? And so I found two. The first one I thought was quite alarming. And it was alarming in the fact that there's this Twitter person called bowtiepickle.eth, and he's a coder, or she's a coder, and this person just does free sort of analysis on random projects, but from a coding element. And this person took GMX to town, ripped it to shreds. And me being a non-coder, I was like, oh, this is not good. And this person found loads of flaws. So I then spent the best part of a week reaching out to as many crypto coder friends or acquaintances that I knew. I was like, can you just translate this into 5-year-old English for me, please, etc. And thankfully, it turns out this is a bit of an overreaction. The person evidently didn't know much about the tokenomics behind GMX, and that it was a dual token thing and how the governance is run on it. And then eventually, it got through to one of the core devs on GMX, and then went through every single bit. So it's worth finding xdev_10 and going through each bit because he dissects bow-tied things. So, thankfully, it's solved somewhat. There's a few I say solved. There are a few things which are, could be improved, but it's not the glaring risk that originally I thought was, just wasted a month of research here, and it looks like it's going to be a rug pull. What's the second catch? Can anyone guess what the second catch is? I've sort of hinted at it.
GLP, and if GLP is fluctuating so much, it's therefore weaker, and you wouldn't invest in it, and GMX is dependent on GLP, GLP is going to stay healthy in order to have a pool in order to keep it going. Is that the weakness?
Yes, basically. So remember, GLP is a big pool of funds that the traders win and lose out of, yeah? Now, in a bear market, most traders get their ass handed to them, right? Including myself. I wish I traded this year better, but I've had a lot of crap in my life this year, as in home, work life. So and by the way, that happens. When you have a shitty work life or shitty home life or whatever, your trading will fall to bits. It is the first thing that falls to bits. Before your sex life. No, your trading is the very first thing that will fall to bits. So in a bear market, everyone gets ruined, right? And which is good for GMX and GLP, because losing trades means all that losing money is going straight into the GLP pot, and all the fees are as well. But what happens when we exit the bear market? Let's say Bitcoin dumps at 12K, 8K, whatever. And then eventually everyone goes, generational buying opportunity here. Everyone go long. If everyone's going long and the bull market ensues, and let's say Bitcoin goes from 10K back up to even 50K, if everyone is making shitloads of profit, what's going to happen to the GLP pool? It's going to get depleted. It could get completely depleted. Game over, GMX.
What happens if it increases its fee rate? So
Well, that is the thing. That's why the fees, the hourly fees, are, in my opinion, rather extortionate. Because I was working out, because of the trades that I do are somewhat bulky, even at a relatively low leverage and whatnot, the trades I'm generally placing, even at, there's trading where I'm going in at 0.25% max risk, etc. And then there's the investments I'm placing. But even with the small 0.25% max risks, the trade value is still 500K to 2.5 million. And so I was working out the hourly fees, and some of the fees for me would be 10 grand a day in fees. So when I'm trading on GMX, I'm not going to be holding these. I will literally be trading as the market moves and getting in and out. And you don't, that's, I guess, a third catch. You don't want to be holding trades for a long period of time on GMX. The fees are going to erode all of your profits. So this second catch is literally, we got to hope, it's actually a very big catch in my opinion. And I think, I've read through the document, because every crypto has that sort of document. I've read through it a few times, and I haven't found any mitigating things. I don't think anyone's really looking at this yet. So as I sit here, I think over the next 6 months, this is going to be beautiful to play with, to buy GMX, to stake it, to trade on it. It's going to be amazing. When the bull market resumes, whenever that is, whether it's January or summer next year, and people start making a lot of money, and you look at that leaderboard, and it's just full of floating profits. And I'm going to be keeping a tight eye on the GLP supply, market cap, 200. If that starts diminishing, and basically the pot is being eroded faster than the fees can replace it, I think I may actually sell GMX. And here's the thing: it's a chain reaction. If I'm thinking that, others are thinking that. And if others are thinking that, then game theory starts to come in here, and people will start front-running what other people may potentially do. The market is weird, right? People front-run what people think other people may do. And then there's an inception of front-running. So stuff happens, and sometimes you have sell-offs when there should be rallies, because everyone's going, oh shit, everyone's going to be taking and then the opposite happens. So I think I'm going all in not all in, but I'm other tokens, but I'm putting big chunky percentage of the pot into GMX. But on a daily habit, one of my new daily habits will be checking the GLP pot. Not just that, but the dashboard as well, looking at the open interest, the P&L of all the traders in GMX, and I think it will be a good daily habit to adopt. Would you agree? Or am I being too paranoid?
Wouldn't it depend where the GLP pool is, or how it's held though? Because if like you've said there, if 15% is held in Bitcoin and Bitcoin value of that goes up, then sure
Yes, it does help.
go up with it.
But it's that whole seesaw thing. Is the pot being eroded faster than ETH and Bitcoin is going up, when most of it is actually stablecoin? So if I was the head of GMX, I would install a mechanism, I put a vote out, which would allow the core team to adjust the allocation of the GLP pot. So in a bear market, you'd flip over to stablecoin to maintain the integrity of your pool. And in a bull market, you go heavier, leaning towards ETH and Bitcoin and Link. Because it uses the Link Oracle to do all of its swapping and whatnot. So in a bull market, if I was controlling GLP and GMX, whatever, I would put a way higher weighting to Ether and Bitcoin in general, and way less in stablecoin. Because then, hopefully, as the bull market resumes, the GLP pool will also grow. That's the only way I think I can save it. Or not I can save it. So I will be suggesting it, because if I'm putting millions into this, then I want to try and influence the owners as much as possible. It's a fully anonymous team, by the way, so I don't know the owners. I never will. But hopefully I can have enough sway that they adjust that, because it's a big issue, I think. So, that is I think they're the flaws. Looking at it from a price action point of view, I'm waiting, because I'm very bearish on stuff right now. Actually, I haven't even looked at the price of stuff today. How's everything doing?
Sorry, Sam. How do we transfer the money from Ethereum Liquid to that one? Because the liquidity is not that great.
Yeah, you've got to scale in.
It's like nothing.
Yeah, go to CoinGecko, click the markets tab, and you'll see where all the liquidity and the depth is, and then buy it on there. I think there's bits on Uniswap. You can buy it from GMX itself, but depending on your volume. But for most people, it won't be too much of an issue. So ETH is still falling. Bitcoin's 19,800. Yeah, stuff's still falling, which is cool. So I know looking at this is an upwards trend, or an upwards channel, and so normally it would be wise to buy at the bottom of the channel, where it's now entered my white hole there. But I am expecting further falling on ETH and Bitcoin. Therefore, I'm actually expecting a break to the downside. So I'm aiming to get into GMX around sort of $25, $26. That's the next technical level of support. We'll see. I could be wrong. It could literally just bounce off here and go, see you, Siam, and head back up here. But that's trading. Trading is not about predicting. It's about having 2, 3, or 4 potential outcomes and attributing a sequence of actions per outcome, and then simply watching. And then when something happens, you go, oh, it was scenario 1. I'm now going to do scenario 1 actions, etc. You're not predicting the markets. It's where everyone gets it wrong. Trading is not a bunch of charting tea leaves. It's simply statistics and probability.